Now, let's move on to bring up our next group of speakers. Here to talk about how to tax the token economy. I mean, we live in a digital world. We live in a world where there are borders. In each of those countries, well, they decide what works in their borders. Let's bring up our speakers now. Céline, Matthias, Miles, and Thomas, welcome to the stage. All right. Thank you, guys. Sorry, perfect.
Right. A very warm welcome after the coffee break that we just had. I'm absolutely delighted that now I can share the first fire chat and panel discussion with my distinguished guests.
Right,
my name is Céline Wong, I work for VP Bank, and we always also wonder what else in the finance industry is also now evolving with the blockchain technologies. So if I may introduce to my right, Miles, thank you for being with us. Miles is head of government solution at TaxBit. So earlier we already had a very insightful presentation, and I'm really interested to hear about it because you also are originally coming from the regulatory side, so you really have the deep knowledge about how the revenue system works in the US. On my left, I'd like to introduce Thomas Linder. He is from MME and also had been awarded as one of the blockchain leaders by WWL, which is a research portal. And also, I had seen you mingling quite a bit in the crypto community in Zug, which, of course, for those in Liechtenstein and Switzerland know, is quite a vibrant community that we have. On my far left, I'd like to introduce Matthias Langner. He's partner at Actors here in Liechtenstein. And, of course, here you have the deep insights in how the government has been shaping around the world of taxes. So I'd like to kick it off really maybe from the beginning. So we see that all of the countries are now mingling to see what is the best framework they can put in and the regulations to put some sort of a tax matter around the whole digital asset world. So I'd like to start with you, Thomas, maybe on your sides. What do you see primarily as the main issues of blockchain transactions? Because now all of us are aware with the new NFTs, and we have all read in the news to what insignificant amounts some of the NFTs are transacted. How does it play for your clients? Are they now concerned about, will I get a tax bill after I buy a monkey?
Yeah, I think the two main topics most probably are, one is income recognition, so at what time do I generate income, if any, and whether it's subject to tax. And on the other hand, I think VAT is a very big issue. So value-added tax, it's a transactional tax. And on one hand, you know, just some basics. So VAT is due on goods or services. Goods, it's quite easy. So if you have something here locally in Liechtenstein and you sell it, it might be subject to the local VAT. But with services, you need to know the identity of your counterparty. So if you sell your monkey to Miles, then it's the question, where is Miles resident? Is he a resident in the US or which he is? That would be good. Then it's exempt from VAT. If he would be resident in Switzerland, then it's subject to VAT in Switzerland. But usually you don't know who your counterparties are. So identity and the location of counterparties is a big issue, I think, in taxation, because if you sell your monkey on OpenSea, you just connect your MetaMask wallet and you do the transaction, and then you're happy because you either have maybe you have a loss today, now you had a big gain, or you have a new monkey, but you don't know with whom you transacted, and that's a big issue because the tax authorities kind of assume if you don't know, then they assume that it was a local transaction, and then it's subject to VAT, and it's the proof that you did an export is then on your shoulder, and counterparty, I think it's in all the different topics. So NFTs, staking, DAOs. So everywhere it's always the question, where is actually the thing or this counterparty located, and what's the type of transaction and the quality of it.
Mm-hmm. So we would, to summarize it quickly, we really need a full transparency of the owners, the buyers and the sellers, and However, now actually coming to
Yes, I would say you need full transparency for yourself,
Yes.
but you should not have full transparency for everyone. But that's certainly the big trade-off or the question in the room, right?
Absolutely. From your perspective, Matthias, so here in Liechtenstein we have this blockchain law. Would you say that this is now visionary to go with time? How does it protect its users or purchasers or buyers?
First, it's very important to mention the Blockchain Act just rules the legal basis. It had nothing to do with the tax basis. So also from a taxation side, we have the same problems like everywhere. We have to look behind the product. And for me, NFT is a very interesting example because what is an NFT from a tax perspective? Because in an NFT, everything can be behind. It could be music, it could be art, it could be financial products. So what is an NFT? And therefore, if clients ask how to tax an NFT, we need transparency as an advisor, what's behind the NFT, because otherwise we can't tax it and we can't consult on that.
Would you see a similar situation in the US? I mean, there's probably a high activity in the NFT trading space already.
Yes, there is. And actually, this is interesting. I'm come from the United States IRS, so income tax is kind of my normal playground, but I think VAT taxes in the United States, we don't use VAT taxes. We generally do sales tax, but it's somewhat analogous. And my background not being VAT taxes, but Thomas, I guess, in the United States, sales tax is a tax that's collected at the point of sale. And I'm trying to remember if VAT tax is the same, but that posed in the United States at the state level, state government level. The state of Washington recently put out guidance around sales tax that is sort of indicating if you're on OpenSea or something, you might need to be collecting sales tax, and you can imagine that there is literally an administrative hurdle to doing that because this sort of decentralized marketplace is operating between buyers and sellers or creators and sellers with the middleman being the protocol. How do you know where people are located? But even if you can solve that part of the problem, how do you capture the tax remittance at the point of sale and then remit a sort of digital asset-based fee? If that's, if you're on OpenSea, it's probably generally, Ether or something, whatever the commission might be paid. And how do you remit that to a government that doesn't recognize digital assets as legal tender? So you can't. So that poses all sorts of ministerial problems, and how does this work? And those are the issues that I think at a sales tax level the United States are trying to solve. And you have states that are trying to push, like, oh no, you need to do this without any solutions being offered about how to do it. So that's sort of a big rub right now in the United States from a sales tax or from similar to a VAT tax problem.
Mm-hmm. And to make it more complicated, it's actually depending on the quality of the service. The seller might be subject to the tax, or the recipient might be subject to the tax, or the seller is subject to tax in the location of the recipient, etc., etc. So it really depends. What is this NFT? Is it related to a specific right? What is the right, etc., etc.
Well, which sounds very much like that my ape may become very expensive. So since you're experts in this field and you see the whole development of the market, would you say that it's in the very foreseeable future that the first governments will start acting on this, or do you see certain jurisdictions globally that are now soft launching or working on certain models and how taxation could look like in that space?
I think in my mind, the first step down any of this down this path, I think at a government level, is going to be, in order to solve some of these problems that are so that I think of as sourcing or jurisdictional location problems, like if you have a buyer and a seller and we're trying to identify where they're at, it's going to be the imposition, and this is going to be a huge friction point, I think, in the ecosystem, because you can have governments that want to start imposing sort of a gating process or a know your customer process where people have to provide at least some minimal level of personal identifying information, which goes against everything that distributed ledger technology kind of stands for. It's this idea that I can somewhat pseudo-anonymously interact with a protocol just based on purely my address on the blockchain with no one else knowing anything about it because it's all public. And now you're going to have protocols that might have to start capturing at least some amount of personal information so they can apply sourcing rules to figure out who owes tax for what or where are people located at. And some of that can be done today through IP address, but IP address information is not the best because you can just VPN around it. But those are issues that come up, and that's where I think the starting point, at least from a government, at least the knee-jerk reaction from governments is going to be to start to impose those rules until the community and the government can work together to come up with better way to apply rules.
So then you mentioned just like multiple bodies within the government. We also see today that it's not only the job of the finance ministry to set up some rules and regulations here. It's also a question working hand in hand with the Ministry of Digitization or of Innovation. And this may sometimes also create some conflict because the interpretation of what is needed, what is necessity, may also be difficult, and it creates already frictions within the interdepartmental. In your particular countries where you're from, respectively Switzerland and Liechtenstein and the US, do you already see that at least those governmental bodies are working smoothly together, or have you came across some cases where you already see certain debates had been going on for too long?
Maybe starting with the smallest country, the big advantage of Liechtenstein is that the people know each other. Therefore, I think the most problems are you have to understand the business model, you have to understand the industry, and therefore you have to talk. And in Liechtenstein, the big advantage is that the key player from government, administration, and also consultants know each other, and they can directly address problems, and they can directly address also what is behind the system. And therefore, you don't have to collect always letters, write legal opinions. You can directly talk. And I think that's very important because transparency, yes, but for me, most important, understanding what is this business. Because from a tax perspective, you always have the rule substance over form. So you have to understand what's behind NFT, what's behind STO. And therefore, you have to talk to understand the model. And that's, in my opinion, the biggest advantage of Liechtenstein because the direct rules.
The small agility being like the speedboat in making decisions, which I highly appreciate that they're so close to one another. What are your thoughts on Switzerland, please?
Yeah, in Switzerland we have, usually the law is very principle-based. So we have general rules and these apply to all different transactions, whether these are digital assets or non-digital assets. So there is no specific legislation on digital assets. Certainly there's certain guidelines that are published, etc. And there, I think that the authorities made a good job that they at least used similar or the same terms. So, from a regulatory point of view, we have payment, utility, asset, tokens, and then with specific regulatory treatment. So the tax authorities take over the same terms, also payment, utility, asset. But there you then need to be a little bit careful because the detailed definition, what falls under a utility token for VAT, that would be a taxable service if you sell it, is then maybe different than to the regulatory definition. So there are slight differences, and that's then important that you don't take the regulatory qualification and you do your own tax qualification out of it because maybe it's totally different.
Well, as they always say, the devil is in the small print. And I guess we have quite big contracts of paperwork. How do you think applies this to the US?
I think in the United States, I'm just going to say it's a mess, which I'm sure everyone in this room probably expected that answer a little bit. But I think back to Matthias's point, in the United States, and even at Thomas' point, generally from a tax standpoint, sort of substance drives the conversation, economics drives the conversation. And I do think there is a part in the United States that the focus is in the background, really is on the idea of as Matthias pointed out, what's the use case? So we don't want to talk about, at least from a tax perspective, we generally aren't in the business of taxing technology. If the particular use case for a digital asset that exists is something else, if it's a security, if it's offering access in the way of some NFTs or utility NFTs or even utility tokens, you're not really focused on taxing it for being property unto itself, but you're looking at taxing whatever the underlying actual economic benefit that's being conferred. The problem is in the United States isn't really on the tax side. I think a lot of the people on the tax and Internal Revenue Service side are happy to be on the receiving end of saying, hey, we're just going to look at what this does and tax the economics of it. The problem in the United States generally turns actually on some different agencies, which I think when I was up here previously, someone asked about Chairman Gensler of the Securities and Exchange Commission and sort of the SEC's approach. And it's trying to sort of expand their jurisdiction over stuff where really they shouldn't be. And we don't have, as you have here, we don't have as good as well-defined definitions for stuff. There's current proposed legislation in the United States that actually would help solve some of this problem by having U.S. Congress set forth definitions that basically bucket where digital assets are going to fit, and sort of a general rule and then exceptions to those general rules. And that's really where the United States needs to get to start to put up some very defined lines about how things fit, and that's going to help bring digital assets into the mainstream. And from there, I think from a tax standpoint, everything will flow out of that, where they fit, and then they'll go downstream. But that's a little bit down the road.
But that sounds like quite concerning. So to adapt all this in real life, if a private person is purchasing an NFT, now that we had heard about all this, pay attention to your taxes, does that mean I have to, as a private person, be afraid that, one, I might get a tax bill coming through the letterbox, or two, should I rather go to the authorities and say, I have just purchased an ape online and I should proactively tax it? So what would you rather recommend to me? So as a person, as a private person, I wouldn't want to potentially do something that is on the gray zone side, and how should I react?
I think the most important point would be to move to Liechtenstein, because capital gains are tax-free in Liechtenstein, therefore it's not independent, it's a security token, it's an NFT, or it's a payment token, or whatsoever, so you only have to assess the value beginning of the year for the wealth tax, but for the income tax perspective, it's not important. Of course, we have the VAT issue, but if you are a small person, so you have behind 100,000, it's not a problem because you have a threshold of the VAT. So therefore, I think Liechtenstein, it's the easiest way, because only assess what you have as a wealth in the beginning of the year, and then all capital gains, all trades, you don't have to calculate, you don't have to notice, it's not important at all.
That sounds already
But
very
as soon as you kind of get the professional NFT trader, because you're so excited about the monkeys, certainly then you could actually perform a business, and that is then maybe a different treatment than in your private wealth.
Yeah.
I think in Switzerland and Liechtenstein as well, I think that the advantage is that you can talk to the tax authorities. So it's kind of an open and friendly relationship. I always say it's like in Switzerland you're treated like a client, and in the US you're treated like a potential criminal if you're a taxpayer, right? So that's kind of the difference. So you can ask, you can discuss, and tax authorities actually are very happy to see transactions, to make their own thoughts about it, and so if the transactions are considerable and it's performed in a business, then usually you can file like a written ruling where you ask for opinion, and you get the signed letter that you can sleep with your monkey very, very calmly.
Very peacefully, without knowing that I get penalized for kind of running away with taxes. Yeah, what do you think, Miles?
No, I think Tomas is right, that you have this idea in the United States that the U.S. tax system is trying to hunt out criminals all the time, but it is different. I mean, you can, at least my role for years, being on the front lines as a regular in the U.S. tax system, dealing with people, going to court, dealing with people, you often found that a lot of people were refreshed by when they actually interacted with examiners or revenue agents, as we call them, to do examinations. They're generally pretty friendly, but when you are trying to file your tax return and you maybe have a question, trying to get a hold of someone to have that discussion that maybe you could have much easier here in Europe is very, very difficult. But so years ago when I first started on sort of this path of talking about digital assets, or talking about cryptocurrency, and we'd speak to accountants and whatever, tax, people that were tax professionals, it was always about, yes, trying to get, if you have clients that are in, dealing in this space, trying to get their information on a tax return, because even if you get it on a tax return, if it's not totally accurate, there's a lot of grace provided by, the U.S., by the IRS for that, if you're trying to do it correctly. It's the flip side of that, the criminal side of that, are the people that are simply not putting anything on the tax return, and then very much trying not to disclose it anywhere. But if you get it on the tax return, that's always the best way, and so staying out of the gray area. And there is a mechanism in the United States where you could get sort of your letter that would let you sleep at night. We call it a private letter ruling. Nowadays, there's a fee. They charge about $30,000 to get that.
Okay, maybe not.
So you have to pay $30,000 to get the benefit of sleeping at, which I think there's a lot of people outside of large corporations that don't want to do that.
Mm-hmm. Right. I think we're coming to an end of our panel very shortly. So to wrap it up, it almost sounds like the goal for ape collectors is to become citizen of Liechtenstein and maybe have a green card from the US and then enjoying the lakes and the mountains in Switzerland. So thank you very much, panelists, for joining me and the audience. I wish everyone a very nice afternoon.
Thank you.